So, Avis just dropped its Q3 numbers, and on paper, they looked great, a solid beat on both the top and bottom line. But the stock immediately took a nosedive, dropping over 6%. What gives? That's exactly the puzzle we're going to unpack in this Talk Tickers analysis. Let's get into it.
Okay, so this slide really tells the whole story. It is a classic tale of two tapes, right? On one hand, you've got the headline numbers, and they are frankly fantastic. I mean, earnings per share at over $10, that absolutely crushed estimates. Revenue hitting $3.5 billion, another solid beat. And adjusted EBITDA up 11% year over year? Beautiful. But then, you look at what the market did. The stock just fell off a cliff, a sharp sell-off on the heaviest trading volume of the entire month. And that disconnect is what we need to understand. That's the whole ballgame right there.
Yeah, a 6.1% drop. That is not just a little dip. That's a serious move for a company that just, by all accounts, knocked it out of the park on their earnings. So what does that tell you? It tells you Wall Street is not looking in the rearview mirror. Nope, they're looking straight down the road ahead, and clearly, they're seeing some pretty big potholes.
All right, so how are we going to make sense of all this? Here's the plan. We'll start by unpacking that beat versus the drop. Then we'll get into management's new game plan. After that, we'll look at the headwinds and headaches that really worried investors. Then we'll flip it and look at the catalysts, and we'll wrap it all up with our take on the next earnings call.
All right, let's dive into management's new game plan, because this is where things get really interesting. See, while the market was freaking out about the next 3 months, the CEO, Brian Choi, he's focused way further out. He's trying to play the long game here. And this quote from him really gets to the heart of it. He says, "We are not just a rental car company, we are a service company." Now that might sound like just some corporate jargon, but it's actually a huge deal. What he's saying is they're trying to escape this race to the bottom, the commodity trap of just being the cheapest rental car. The new message is simple. We're not going to win on price, we're going to win on service and experience.
So how are they going to do it? Well, this is their plan, what they're calling the Avis flywheel. And it's a pretty classic business model, but it's powerful. It goes like this. First, you stay super disciplined on your costs. Then you take those savings and you pour them into making the experience better for both your customers and your employees. When you do that, people are happier, they spend more, and that drives more revenue. That revenue growth gives you operating leverage, which means more cash to, you guessed it, reinvest back into the experience. The wheel just spins faster and faster. It's how you build a really strong, lasting brand.
And here's the thing, they've actually got some early proof that this isn't just a theory. Their new premium service, Avis First, is pulling in a 4.9-star rating. I mean, think about that, 4.9 stars in the rental car industry, a business famous for long lines, confusing paperwork, and hidden fees. Getting a rating like that is honestly almost unbelievable. It's a huge signal that yes, people are absolutely willing to pay for a better, smoother experience.
Okay, so that's the beautiful long-term vision. But as we know, the market sold off hard. Why? Because that vision was completely buried by a pile of short-term problems. So let's dig into the headwinds and headaches. What exactly went wrong?
It really came down to 4 big issues. First up, vehicle recalls. This is a huge one. It's costing them somewhere between $90 and $100 million this year alone. But the real kicker? Management said this headache could stick around not just for another quarter, but maybe all the way into early 2026. Ouch. Second, they took down their full-year guidance, which is Wall Street code for, hey, Q4 is going to be weaker than we thought. Third, pricing. They're feeling the squeeze, especially here in the US. And finally, demand is looking a little soft on the government and commercial side of the business. You bundle all that together, long-lasting problems, a weak outlook, and you get a big cloud of uncertainty. And if there's one thing the market absolutely hates, it's uncertainty.
And this chart right here, this really paints the picture on that pricing pressure. Look at the difference. International is doing just fine. Revenue per day is up a healthy 5%. But the Americas, their biggest and most important market, it's down 3%. So think about that. Your costs are going up, but the prices you can charge in your main market are going down. That is a massive red flag for any investor.
Okay, so we've spent a lot of time on the problems. That's why the stock dropped. But what about the path forward? Let's talk about the potential catalysts here. What could actually turn this ship around?
Well, in the near term, it's really all about execution, plain and simple. Can they get those recalled cars back on the road faster than people think? How well can they manage their fleet costs with what's happening in the used car market? And can they keep growing that Avis First service to prove the premium strategy is for real? Now, longer term, you've got some big macro events on the horizon, like the World Cup in 2026. But the real elephant in the room, the potential game changer, is that partnership with Waymo.
Yeah, this Waymo partnership is the real wild card in the deck. It is so much more than just Avis renting some cars to Waymo. No. Avis is basically becoming the entire operations backbone for Waymo's autonomous fleet in Dallas. We're talking about handling vehicle prep, cleaning, maintenance, depot management, the whole shebang. If you step back, what this does is it starts to transform Avis from just a rental company into a critical mobility operations provider. I mean, and it's a big if, but if robo-taxis become a real thing, this partnership could be absolutely massive, a total game changer.
Okay, so putting it all together, what's our take heading into the next earnings call? Here is the official Talk Ticker's view.
First off, let's just clarify what our rating means. We're slapping a market perform rating on this one. And all that means is we expect the stock to pretty much move in line with the overall market for the next year or so. It's not a screaming buy, but it's not a get out now sell either. It's basically a hold, because there's this real tug of war between the risks and the potential rewards.
So for the next quarter, our prediction is this. We think earnings per share will probably come in right around what analysts expect. But revenue? We see that coming in a little light, thanks to those recall and pricing issues we've been talking about. And for the stock price itself, look, it's probably going to be stuck in a trading range for a while. The market needs to see hard proof that the long-term strategy is actually working and that they're getting a handle on all these short-term problems. It's a classic battle. You've got a solid, profitable business on one side, but a bunch of messy operational headaches on the other. Until one of those stories wins out, the stock's just going to tread water. And that's exactly why we're landing on market perform.
All right, and before we go, let's throw out a little outrageous but plausible trade idea. Let's say you believe in that big, long-term Waymo story, and you just want to ignore all this quarterly noise about recalls and pricing. Well, one way to play that is with long-dated call options. Now, let's be crystal clear. This is super high risk. It is pure speculation. But what it is a direct bet on the future of mobility. A future where Avis isn't just a car rental company anymore, but a central player in the whole autonomous vehicle ecosystem. This is not financial advice.